ESOPs can be extremely powerful tool, especially for business owners that don't have the traditional exit strategy. It's commonly prevalent in heavy service businesses, etc. Also, ESOPs are quite prevalent for companies that want to use employee ownerships as a major incentive to drive performance and to sustain a business legacy. So what I wanted to focus today on, what are the top 5 tax advantages of an ESOP. Number 1, you can sell to your employees on a tax-deductible basis. Let me say it differently. Your employees buy you pre-tax. Now that's pretty powerful. Number 2, you get to defer capital gains as long as you reinvest the proceeds in U.S. securities. So if you bought U.S. stocks, you will be able to defer your capital gains, and that can also be very powerful. Number 3, if the ESOP borrows money, so essentially you can either provide financing to the ESOP to buy you out, or the ESOP can use your company cash flows and leverage them and go to a bank and borrow the money. And you get all your money up front, and the ESOP's basically got this debt inside. And so if the ESOP borrows any money, all the contributions that are being paid to basically pay the bank debt, and this includes principal and interest, they're all tax deductible. And that's very, very powerful. Number 4, percentage ownership held by an ESOP is not taxable. So what do I mean? Well, let's say you're an S Corp and your ESOP owns 35% of your S Corp. Well, 35% of the profits that are attributable to the S Corp, not taxable. So not taxable at the federal level, and depending on the state, not taxable at the state level. And this can be very powerful. I mean, imagine if you had, if the average tax rate comes out to be 40%, I mean, that's 40% more money to retire debt quicker. That's extremely a powerful aspect of the ESOP. So not all is perfect with ESOPs either. There's plenty of issues with them. Well, starting with the biggest issue of all, they're cumbersome to set up and expensive. So the transaction size needs to make sense. Typically, ESOPs start at about $40,000, $50,000 in upfront expenses, and then there's ongoing yearly expenses. So ESOPs need to be for transactions that are fair size. You don't want to be a very small company using an ESOP simply because it's cost prohibitive. Secondly, ESOPs are not available for all entity types. So if you were a partnership or a professional corporation, ESOPs are not available to those entity types. And third, many owners don't know this, that one of the limitations of the ESOP is that if one of your employees was to leave, the ESOP would have to purchase their shares back. So, like I said, ESOPs are not perfect, but for the right company, they can be a very powerful tool, especially when you take into account the tax benefits associated with it. Rare Brain Capital helps companies improve performance and sell for maximum value. How ready is your company to grow or to sell? Want to know how you're doing? Get your free score plus customized report in just a few minutes at no cost or obligation. Visit rarebrain.com/score.